Welcome back to Financial Jojo. My name is Josh, and this is the market update. Please hit that like and subscribe button to get the latest in the market moving news. Today, I wanted to cover what the hell happened last week. Excuse my language here. So we had on Friday, Dow Jones was down 0.53%, S&P was down 0.79%, NASDAQ was down 1.66%, and the Russell down 1.55%. And of course, we had the VIX up almost 5%. As we can see, like I always say, the VIX is my buy indicator. It shows the fear in the market. So when it's, climbing up to 34, 33, and right now we're at almost 32. That fear in the market, it's time to buy. With Russia, Ukraine, all the growing tensions, some investors want to hold on to that cash, that dry powder. But, I did some buying on Friday. I was feeling pretty good. I was going into my conviction plays. So last week we saw Fed Powell coming out saying, we should have moved earlier on this. It basically confirmed that they were going to do a 0.25% increase on interest rates. They had spoke all summer about transitory, definitely not transitory on the inflation. Hindsight, we should have moved earlier, Powell said Thursday. Yeah, and it pretty much confirmed at, the 0.25%. And the market, all the investors, everybody at Wall Street, they like that certainty. The FUD, the fear, the uncertainty, the doubt. Everybody wants to sell. When they know what to expect, they feel good, they're buying. That's what we like to see. And of course, they're going to raise it at this March 15th, 16th is when they're going to put that in action. I'm 100% sure they're going to do the 0.25 on that. Also last week, we had Ford coming out with this big EV split decision. So they're not splitting into separate stocks. They're not separating companies. They're just moving the EV division. So I had originally bought into Ford back when it was, $12.50. And then I held it all the way up past this, of course, until it was about $20. And then I had sold out of all my positions of Ford, because I saw what the market was doing. I thought it was overvalued, and now it's back down to 16.85 is where it closed. Of course, it's been doing great last 6 months. Year to date, it is down 22%. So obviously, I sold out at a good time. Trusted my instinct on that. But I did want to take a look at Ford. So lots of buzz, lots of positive, articles coming out, all the media. So let's see what the top analysts have to say about Ford. Once again, love tip ranks for this. So we have 16 analysts with a moderate buy rating on that. They see a price target of $23.13, a 37% potential upside. Of course, this is, we need to take into consideration the Russia-Ukraine tensions. We need to take into considering the chip shortage. Ukraine is a huge producer of the materials for chips. So that is something to consider. We also have, look at the inside traders. So when you see corporate insiders buying shares, they believe in the company, they're getting in it. That's a good sign. If you see mass sell-offs from insiders, not usually a good thing. I mean, everybody was really fearful when Elon was selling all his shares of Tesla. Of course, he was buying them on options where he could buy more shares of Tesla for super cheap. So, sell them, $1,000 share, buy more for, $10 or something. It was stupid cheap. So, like I said, a moderate buy on the Ford stock. Bloggers are bullish. News sentiment is bullish. All the investors on tip ranks are very positive about that. We do see a decrease in hedge fund activity. But like I said, I always look at the insider activity. I think that's a better judge. If they're in the company, they know what's going on. They're going to have a little bit better wisdom into that. I had originally opened my position due to the dividends. I was building a dividend portfolio, which has been doing pretty good. Of course, everything's down right now. We do see, this is another website I really like here. It kind of gives you a fair value of it. Currently, it's trading at that $16.85, and they have a calculated fair value of $32.83, 48.7% undervalued. So I was looking at this. They also have risk checks. So the revenue and earnings forecast to grow for Ford over the next 3 years, it's expected to decline. And their debt is not well covered by operating cash flow. Also, their dividends has decreased. Here, I'll pull that up. So we can see back on tip ranks that their dividend amount per share has decreased. So in January 2018, it looks like it was the most at a 7.49. Currently, dividend yield of 0.82. Of course, with the price going up, you can see the dividend yield going down. Myself personally, I would love to start a new position when this gets back down around $14. I mean, right now is not bad, but if I see it dip a little bit more than it currently is, I would definitely consider getting back into it. When I first looked at it, I was looking at when it was about $8, so even farther back than that. Where was that? So about August 2020, maybe a little bit later in the year. So right before 2021, Ford was a super steal. I considered it, and then by the time I actually pulled the trigger, it was trading at that $12.50, like I said earlier, and then I had sold it, of course, after the peak, because that's just my way. But I still made great money off of that. It was lovely. So back to this article after that tangent. I'm sorry, guys. This EV split, basically just going to be a new division so they can focus on growing their EV business. Of course, they want to compete with Tesla. They want to compete with GM. So in splitting this, it's going to give them the ability to focus a little bit more tighter on developing their EVs. This will also allow them to be a little bit more transparent so they can have their legacy, their gas engines and diesel engines be reported a little bit separately. That way we can see what money is being put into the EV division and how that is affecting it, instead of just lumping it all together and say, hey, you lost, hundreds of millions of dollars on this. And then that is also going to kind of preserve their current strength, or their cash cow, as this article says, on their pickup truck sales in the United States. Then we can also look at GM, who also has been dabbling in the EVs. We can see they're also trading below their fair value, but their earnings are forecasted to grow 10.63% over the next 3 years. So let's take a look to see what the top analysts have to say for General Motors. So top analysts have a price target of $74.27 with a 75% potential upside. That is awesome. So they are seeing over the next 12 months, with the top analyst saying 100, and then the other one for low being $53. That's a moderate by 15 analyst. Let's see what the news sentiment on it that is. Positive. We got a couple bearish articles over the last 7 days. And then we take a look at earnings. The reported, they crushed them. They have beat all of their estimated earnings, and their revenue has been pretty consistent, which is always a good thing to see. Of course, getting into the legacy automakers, you have your GM, you have your Chrysler, Ford, these cyclical stocks. You can see they kind of been falling over the last couple of years. I'll pull Ford back up just to talk about that. So the last 5 years, they basically were just trading sideways, just falling. We saw from 2018 to 2020. That was 26%, and then COVID, and then they had this nice little pop. And then, of course, this Russia-Ukraine, and then we had mass sell-offs at the end of 2021. Well, as opposed to if you look at Tesla was trading relatively flat until about 2020, and then just boom, rocketed. And I can tell you, when I'm riding in the car with my kids, they point out all the Teslas. They might point out a Mustang, but every Tesla gets pointed out. So it's definitely they're chasing Tesla on this, which is, crazy to think about considering how new they are, versus Ford, who's been around, 100 years more now. In another article that I wanted to cover, we had Berkshire Hathaway reveal a $5 billion stake in the oil giant Occidental Petroleum. Like I've been discussing in my market updates, energy sector has just been blowing up with all of this fear and uncertainty and doubt and all this geopolitical issues in Russia and Ukraine. Oil prices per barrel has just shot up. We're looking at about 115 right now per barrel. And this stock, of course, they bought 91.2 million common shares. In the last week, it's up 45%. It had a nice 18% gain on Friday. I do believe that was Friday. Yeah. So, of course, Uncle Warren looking for that value. So let's take a look at Occidental Petroleum here. All right, so if we take a look to see what the top analysts on Wall Street have to say about that, they're looking at a potential price target of $46.94. So we're looking at a 16.40% potential downside. Of course, we had that crazy jump, and so that's why we're seeing that. So we can see that 45% up and just shoom, rocketing. Literally to the moon on this one, guys. So a few things to watch here. This company does have a high level of debt, and they just became profitable this year. Their earnings are forecasted to grow about 4.59% this year, and they're currently trading about 27% below what some analysts believe is fair value. We have the volatility of Occidental a little bit higher than the industry, but it is not more volatile than the rest of the market. And its return versus the industry is exceeding the U.S. oil and gas industry currently with a 41.9% over the past year. So here we can see that it is currently about 27.4% undervalued. They have the fair value at $77.35. So we can just jump in. So they're shooting quite a bit higher than what I see on tip ranks. Like I said, I like to kind of compare and contrast tip ranks and this other, Simply Wall Street. So when we check some of its competitors, of course, we have Exxon, which I've covered the last couple, Chevron, and ConocoPhillips. U.S. states here. So we can see it's most similar to maybe a ConocoPhillips. Once again, these are going to be more established. And we can see that the liquid and stable of their share price, it has been stable. They have high quality earnings, and the profit margins have improved, of course, because they became profitable. So let's jump into this. Once again, we're seeing corporate insiders buying up shares. That is always a good sign. When you see the insiders buying, you should be buying. They know more than you. They work there. Very rarely do you see insiders buying up shares when the stock is crashing. So you're seeing buys. You're seeing some insiders selling here just because they're here to make some money. That's a huge jump. 45% in a week. Of course you'd be cashing it out. It's dumb not to take profits. Holding isn't always the way. Sometimes you got to know when to get out. I did the same thing with Ford. If you were in this company and you'd bought down at 28 and you didn't sell right now when it's at 56, that's just not a good move. We're here to make money. We're not here to hold back because it's going to drop down. And what if it goes below when your initial investment is? Sell it, take the profit, get back into it when it drops down, because of course you're going to see some pullback on this. All right, thanks for joining me. Don't forget to click the Moo link down below. Get up to 5 free stocks, depending on your deposit amount, and also get a free share of Lucid. Soon that will be changing to XPeng. So if you're looking to get into some of the EVs, you want them for free, awesome deal there. And don't forget, I also have my Gemini link down there, when you deposit $100 or when you trade $100, get $10 in free Bitcoin. Gotta love that. Also enjoying my 8.05% on my Gemini dollar. It's a stable coin, get interest on it. Love it. Been doing that. Gives me a little bit of certainty, especially in my crypto portfolio. So I appreciate you guys stopping in, listening to me talk about Ford and all the craziness going on. I do expect more volatility this week. So if you have some dry powder on hand, buy the dip. Thanks, guys. Have a wonderful day.